Hey guys, Stokes here. Welcome back to another Weekend Trading Edge video. If you guys are brand new, this is a video I do each and every week here on YouTube, sharing with you the top trading opportunities that are on my radar for the week ahead. So make sure you subscribe, that way you don't miss it. We ended last week with some very explosive news events in the market, and let's just say we ain't done yet. So just to point out a few things that you should be paying attention to in the markets this week, we have Consumer Price Index, CPI coming out for Canada, and retail sales coming out for the dollar on Tuesday. Wednesday, we have more CPI, this time coming out for the Bank of England. Then we follow it up with the main event for the week, which is an interest rate decision for both the Bank of Canada and the U.S. Federal Reserve on Wednesdays, both of which are expected to make cuts. And then just for a little bit of dessert on Thursday, we have more interest rate decisions from the Bank of England and the Bank of Japan. Now, these two aren't expected to make any changes, but we should always be paying attention to future guidance, meaning if they're going to give us any clues about what is going to happen going forward. So let's hop into the charts. We're going to start here on the Aussie Canada, and I'm going to start on the daily chart. And this is a interesting trading situation. I call it the Fibonacci inversion trade. It's a trading opportunity that is trend continuation, but disguises itself as counter trend, and that'll make sense in a little bit. But first and foremost, I want to go through my 4-step process. That way I can have some clarity on what my expectation is from the market. And that process is called IPDE. It stands for Identify, Predict, Decide, Execute. So obviously, price action has been on a little bit of a bullish run here on the Aussie Canada. If we zoom in, you can see aside from Friday, we spent the last 5 days with bullish movement. We've broken and closed above our most recent previous structure high level of resistance right here. We can even go back a little bit to this little guy right there, which allows me to identify that price has broken and closed above that level and then predict that price is likely to go higher. Now, the next part of my prediction is if we are likely to go higher, where are we likely to go higher to? This is important because this is going to set up whether there is actually room to trade, right? If price has already come to the next level that I expected price to go to, then the move has been made. I don't want to be interested in a trade in that direction. Rather, I want to look for a trade in the opposite direction. So I'm a structure-based trader. If you're following this process, you want to take whatever you value. It could be Fibonacci, it could be pivot points, it could be Bollinger Bands or volatility bands, whatever you want to use. But you should have something that allows you to make a prediction about where price action is likely to go to next. Me personally, I like using structure. So I want to look for my next level of structure, and the next zone I have of structure is going to be right here. If you can, I'll zoom in the video hopefully, but this level right here will be the next level that I expect price action to go to. And you can still see that we've got a little bit of room. This will open up some more as we get down to the lower time frames, but a little bit of room before we get up to that level. So let's hop down to the 4-hour, right? That gives us a little bit of clarity here. You'll see a pullback starting. You'll also see a nice little rejection zone right here. This is going to be our kill zone, which would be a nice place to look for a retracement if we end up getting a deep one. So first and foremost, for a 4-hour trader, to keep it simple, if price action pulls back to this level, then look for an extension up there. Something that is a little bit different on the hourly is kind of the rotation that we've had here. And we can look at this in two ways. One, if we just want to follow up on that initial idea of a potential retracement within this general zone, what we can do is we can look for a one-to-one measured move, a harmonic pattern. So I'm taking a move from this swing high to this swing low right here. I'm going to copy and paste that move. I'm going to drag it on to the retracement that we just got. And you can see that's going to land me right in this level right here. I haven't done this yet, but let's actually see if I take a Fibonacci extension from my swing high to my swing low here and back up. Do we get any confluence there? Not really. There's a 127 a little bit above, a 1618 a little bit below. We can take a Fibonacci inversion as well. And again, I didn't do this in my initial analysis. I'm just didn't plan on talking about this, but we can now that we're here. But you can see a little bit of confluence between the 127 from here to here and a 1618 inversion. So you could look for a move like that. What I would be looking for too, as well as a first strike entry, is something called a Fibonacci inversion trade. And what I mean by that is this. So price action has ebbed and flowed up, right? We have a swing high, we have a retracement. We have a swing high, we have a retracement. We have a swing high, we have a retracement, we have a swing high, and then we have a violation of this level here on the hourly. Now, typically when you see this, you would say that the previous outside return has been violated, and therefore we are no longer in a trend continuation setup, right? You guys that are on the platform, you guys that have been through the foundation course, I hear you yelling, Akil, these are the rules that you taught to identify trend. Why is this going to be any different? And to make it simple as possible, understand that the market works in fractals, meaning that there are always going to be smaller moves within bigger moves, kind of like snowflakes, how there are like smaller designs inside the bigger designs and even smaller designs inside of there. It goes on forever, right? And in some cases, right, if you are projecting a move off of a higher time frame, as you go down to the lower time frame, you're going to get a different signal. However, the higher time frame signal or setup is always going to trump the lower time frame signal or setup because the higher time frames are more powerful. So in this situation, we're still looking for that pullback here on the 4-hour, right? Nothing has changed. There's no type of violation. This is simply a pullback here. But on the lower time frame, we just have some more ebbs and flows. And what I've found specifically in day trading with this, because you see it a lot on the very lower time frames where there's more noise, is that this particular setup is one where it kind of baits us into thinking that the bullish move is over, only to kind of sneakily get people out of their positions, and then the overall trend continues in the original direction. And what I do in this scenario is this. I do two things. One, I take my Fibonacci extension tool from my swing high to my swing low and then back up. And then I take my Fibonacci retracement tool from this swing low, right, the last actual swing, to my swing high right there. And once again, I look for areas of confluence. And we're going to have a nice area of confluence right here between our 127 Fibonacci inversion here and our 50% Fibonacci retracement. So I would say this, right? Again, bigger picture, if we venture down into this zone, this is the bigger play that we're looking at. But if price action were to retest this level right here, meaning we get a bearish candle, it gets down to this level, maybe it holds, maybe it gives a little bit of a rejection like that. It gives some sort of signal that price has held that level and is likely to reverse. This will also be a decent place to look to get involved in that trend continuation move higher. Real quick, I didn't do this either. I tend to do these videos kind of just live, and let's just see if there's a 127 up there for targets. Look at that, right on the nose. 127 Fibonacci extension, right at the low of our target zone, 92.50, psychological level there as well. Perfect place to look for profit targets. Now, if that was a little bit too much, but you're interested in it, I have another video on the channel called Crazy Fibonacci Trading, my favorite day trading strategy. At least that's the one I can remember off the top of my head. I will link that in the description box below, as well as the comments if you want to watch another video demonstrating this same technique. Oh, one thing I forgot to mention about the Aussie Canada for you fundamental traders out there. Remember, Wednesday, we have a Bank of Canada interest rate decision, right? There is pretty much a consensus that they are going to get back into a rate cutting cycle. Economics 101 tells you that interest rate cuts equal weakness for currency. So if we're looking at weakness for currency, that would mean bullish movement here on the Aussie Canada. Now, with that being said, remember that that's already priced into the market. The market has, it's not a surprise. It's known about it. So that's why we've been seeing this bullish action for the last, pretty much month or so. Yeah, pretty much about a month. So the interest rate cut isn't really going to matter all too much. So don't fall victim to that. What is going to be important, though, again, is that future guidance. Will the Bank of Canada say or confirm that they are going to continue to cut rates after this, and it's not going to be a one-off type of thing. The market is leaning towards one more cut before the end of the year. So I think if they can confirm that or even more, right, then we're going to see a massive jump to the bullish side here on Aussie Canada, which would go in the favor of your trade. So you fundamental people or you hybrid traders that like to blend both together, this would be one where we always talk about home run trades, where if you can establish a bullish position, this is one where you can potentially hit a home run because the fundamental analysis has a likely chance of lining up with your technical opinion. Now, going from the complicated to the very simple, and I apologize if you're new. You're probably like, man, this guy's trading strategies are so complicated. They're really not. My trading actually get made fun of because they're so simple. It's identify structure and look for price to go to structure. That just happened to be the one where you gotta have a few moving pieces. This one's gonna be right up your alley, right? So going back to that IPDE process, identify, predict, decide, execute. I'm going to start here in the daily on the Euro Aussie, and I'm going to identify what price action has recently done. If I look left at my most recent structure low, and then I zoom back to the right, we're going to see that we have recently broken and closed below that previous level of structure. So once again, a break and close below a previous level of structure, aka a violation, allows me to predict that price is likely to continue lower. I have to ask myself the question, Nikhil, if price is likely to continue lower, then where are we likely to continue lower to? I'm going to isolate this candle right here and make that my prediction area, predictive, the predict it area. There we go, something like that. And now I have my trading scenario. I think that price is going to go down here. The next question I'm going to ask myself, this is the D part, is how am I going to get involved? Well, going down to the 4-hour, right? Price, again, has given us a lower low, lower close, a small extension. Now we are starting to pull back. Now, the zone in which I would anticipate us pulling back into would be from right here to right here. How did I do that? Well, I just looked at the end of my previous extension and then the high of that retracement, and that is my kill zone. I made the joke last video, a kill zone. You can all laugh now, ha, ha, ha. But we're looking for a price to enter that zone and then looking for your reason for entry. Now, we have a few things here as well. We do have some hidden divergence, which is interesting, right? So hidden divergence is this. This part is going to get a little bit weird, but I don't know if I want, well, yeah, anyway, we have currently our highs getting lower, right, on the price chart. We have a high right here, and then we have a current high right here, and this one is lower than this one. However, on our RSI, we have our previous high right here, and our current high is up here, right? So divergence is when your indicator or oscillator is doing something opposite than your price chart. Price chart is going down. Oscillator is going up, right? This should be the same, right? One should be going down, the other should be going down, right? So in many cases, we look at divergence traditionally as like a sign of a reversal, where we look at a different side of it. In this case, for a trend continuation scenario, hidden divergence is going to be a beneficial key, a clue that you can add to your puzzle to give you confluence with your intended idea. So I was going to keep this one simple, and now I went and got complicated again, guys. I'm sorry for that. But anyway, we're looking for a pullback trade here. Once again, look for your reason for entry. What is your reason for entry? Well, check your trading plan. It could be as aggressive as just buying or selling right now. It could be waiting for a lower low, lower close. It could be waiting for a double top on a lower time frame. It could be an inside bar. It could be a pin bar reversal, right? There are numerous ways that you can use to enter a trade. If you're asking what is the best way, the answer is there is no best way. The answer is what is the best way for you. And that is something that you should have in your trading plan. So that part I can't help you with. You have to do that work on your own. But what I can tell you is that if you get that entry reason, whatever it may be, in this zone, this is a decent place to look for shorts. And we may have the same thing as Aussie Canada. Again, I didn't do this at all, but let's see if we have a 127 lining up at the top of that kill zone. Once again, really, really close. 127 Fibonacci extension right above the top of that kill zone, which is 175.5, so another psychological number. Some pretty nice confluence there. All right, next up is Euro Canada. We're on the 4-hour, but we're going to jump to the daily and I believe the weekly as well. We've been doing some consolidation, right? You can see price action has boomed up. We've actually broken and closed above our most recent level of structure. And then we've kind of gone sideways. This is an ascending triangle with a little bit of funkiness to it, thanks to all the news that came out this week. But aside from this outlier candle right here, you can see price has consistently put in equal highs. However, our lows have gotten higher and higher and higher. This is one of my favorite patterns. It's called an ascending triangle. It gives a bullish directional bias because the bulls have, yes, been unable to break the highs here, but each time the bears push back, they're losing steam, losing steam, losing steam, and eventually we should see, or at least I would project, a move to the upside. Nothing is 100% in the market, but this is where the edge is at on this particular pattern. Now, just like we spoke about before, I don't just want to make a prediction on, hey, what direction are we likely to go in, but I want to ask myself, is there actually room to go higher? And this is where I want to get my higher time frame opinion. So I'm going to draw a horizontal line here at the very highs of this pattern here on the 4-hour. I'm going to zoom out, and you're going to see I need more room. And I'm going to go to my daily, and I'm going to ask myself, is there anything looking left that I need to pay attention to? Well, yes, these right here, but we've already violated these key levels. That's a positive sign. But there's maybe something else sneakily in the back. So let's just go to the weekly real quick. And let's go all the way back in time and see what is the next valid level of structure that I need to pay attention to. And we're going to go all the way back here to 2009. Now, many of you guys have asked the question, and you've heard Trading Coach podcasts and videos here on YouTube addressing the concern about how far should I look back for structure? When does structure become irrelevant? All types of those conversations. And I've said that you want to have a recency bias with structure. Now you're probably saying to yourself, well, Akil, if you're going to have a recency bias, 2009, isn't that recent? No, it's not. Unless you started trading in 2009. You can't believe that you've been doing this almost 20 years already. And it's crazy how old you're getting because your kids are getting taller and taller. And one is almost a teenager. And anyway, what we also want to look for is not just our most recent levels of structure, but our most recent relevant levels of structure. So again, for you guys that have gone through the Foundation 2 course, I'm talking to the Tier 1 trading members right now. Remember our conversations on inside versus outside levels of structure. Which ones are more important? Well, your outside levels of structure. Why are outside levels of structure important? Because they have not been violated. And those are going to be the next like magnetic points that price is pulled towards. So although this previous level of structure came back in 2009, it has not been tested. So it still remains relevant. So I want to mark this on my chart just because I want to say, hey, I got to pay attention. I don't necessarily want to trade that breakout while we're still at this previous level of structure. I also want to do another mark, and I'll do one just a little bit higher to say, hey, if we can get past that level, then there is a little bit of room to move higher. So let's kind of get back to reality. Love doing that. And let's go back down to our 4-hour time frame. And yes, I'm still interested in the breakout of this pattern, but I'm not necessarily interested if we break out here because this is a little bit of a trap zone, knowing that we have that previous level of structure looking to the left. But I will say that if we can violate this level right here, then I'll be interested in taking longs that can continue, there we go, all the way up to this level. So still anticipating a potential bullish breakout. Same deal with Aussie Canada, Canadian interest rate decision, cuts, more cuts, weakness, could see a potential move higher. But I don't want to fall for the trap of just waiting for this level to be violated and looking to trade right away. I want to give myself a little bit more patience and wait for what I believe is the more keyest level to be violated, and then look for that move up. And again, nothing wrong with being patient. As traders, and I mentioned this in the Market Wizard podcast I just put out, or podcast/video I put out, we don't just want to trade as many opportunities as we can. We want to wait for what we consider to be the best trading opportunities. Next, we're going to be on the Dow Jones, and I keep promising every time I'm going to give you a simple setup. This is going to be the one. I promise you that, maybe, and if I mess it up, I'll just edit it out. So, what has the Dow Jones recently done? We have recently broken and closed above a previous level of structure, right? This kind of looks familiar, doesn't it? Like we just saw this on a previous pair, right? Look left, there's nothing in the world here except for this random dinosaur, right? But we have broken and closed above. And now we have started to retrace, so we are pulling back into our previous highs. What happens is when resistance is broken, it tends to now act as future support or potential future support. So this is a level that I would look for a price to come to before doing our next move up. Now, if we go down to the 4-hour chart here, you're going to see we have a nice pullback right into the top of this zone. We have technically entered the zone, so now I am looking for my reason for entry. We went over that again. Now, the zone is bigger than this. The zone is going to technically go all the way to, I should have measured it like this. It's technically going to look like this because a violation of this level is where we'd have to think twice about being interested. But this is the very start of it. So again, what we're doing here is we're waiting for price action to enter our kill zone. And then we're waiting for whatever else we need in the market, whether it's the RSI doing something, your MACD, your stochastics, your moving averages, your just a simple candlestick or price action pattern. By the way, that's another great podcast episode I did. I don't remember the name of it, but it was the one with Adam Grimes. And I mentioned, let me see if I can bring it up real quick. It was the one where I mentioned a few, I think I named like 8 really key patterns to look at. Where the heck is it? Oh, 10 signals from my favorite trader. It's called How to Avoid Market Traps. 10 key signals my favorite trader recommends studying. Once again, I will put a little YouTube card up probably and put notes in the description in the comment section below so you can check those out next. But those are also really, really, really good signs that you can look for in this level. So pretty much a simple pullback in the structure. Look for reason for entry. Look to hop on that next move up. Hope you guys enjoyed the video. Like if you did, subscribe if you're not subscribed already. Lots of amazing content here on the YouTube channel. Thousands and thousands of videos, including these daily shorts. When I say daily shorts, I literally upload 2 a day, which give you little quick trading tips, hopefully to be like a little caffeine boost for your trading day to keep you motivated, inspired, and of course, teach you something along the way. So enjoy the rest of your weekend. Be safe in the markets this week. And until next time, plan your trade, trade your plan. Take care. Oh, if you want to learn more about trading, www.tier1trading.com, 14-day trial membership. Get over, learn with us, be part of a great community of traders. And yeah, I'm supposed to do that more, so I did it. Now, goodbye.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.